Hey everyone, this is Kirk here again at optionalpha.com where we show you guys how to make smarter trades. And today we're going to cover all of the trades that I made here on July 30th, which is Wednesday. Now, I didn't get any trades filled on Monday or Tuesday, and I sent out alerts to all the members about that, and I guess everyone's really itching for some trades, but just nothing really got filled. We had a lot of working orders, and I'm never going to send out any working orders to everybody. I did that a long time ago, and it would just honestly crowd your inbox. As many different orders as we have working in a given day would just overload your inbox and just blow up your phone with text alerts and messages. So I'm never going to do that. So I know a lot of people asked about that and I appreciate it, but it's just really way too complicated for you guys and for us. And that's not what this program is about anyway. Today we are going to talk about just the two closing trades that we had in HLF, which is Herbalife, and then MCD, which is McDonald's. Again, no new opening trades, no adjustments to anything, but I am going to cover and talk about LinkedIn as part of this whole process because that seems to be one that everyone is talking about a lot, and definitely in the comments. I've got a lot of emails about that, so obviously, just want to touch on that briefly. The first trade that we close out today is HLF. Now, HLF as Herbalife had really bad earnings yesterday, and the stock gapped lower. And what we did is we just wanted to wait another day. We could have closed out yesterday, and we could have bought it back for about a 15-cent debit. But we thought, you know what, at some point, implied volatility is still going to continue to fall for this thing, so we're going to be able to buy it back really, really cheap. And that's what we did today. We bought it back at a 5-cent debit, which is about as cheap as it's going to be until August expiration, which is another 16 days away, and took a nice $47 profit on this trade. Now, what's really important about this trade, and really what dovetails into the discussion about LinkedIn tonight, is the fact that this stock actually rallied ahead of earnings. So in fact, the stock actually fell, right? And then we sold our call spread and implied volatility ran. But then, just a couple days before earnings, there's a lot of publicity about Herbalife possibly beating their earnings expectations and really outgrowing their revenue and profit and all this other stuff. And at the end of the day, here's what I want to tell you guys. Nobody had a freaking clue what was going to really happen because Herbalife, although the market expected Herbalife to beat earnings, actually ended up being horrible with earnings and gapping much lower, right? And so again, nobody expected this to happen. Not to say that I did expect it to happen because I didn't expect it to go anyplace, right? I was just making a trade and making a high probability trade from the beginning. But what I want to tell you guys is that you, nor me, nor anybody else in the market really has a clue where these stocks are going. And so this leads into the discussion about LinkedIn right now. So LinkedIn is obviously a hot stock that everyone is watching and is going to be watching for their earnings, which come up tomorrow after the close. So some people thought it was today after the close, but they're actually supposed to be scheduled tomorrow after the close. But you can see, again, just like with Herbalife, this stock has actually rallied significantly. I mean, it's almost gone up like 15 days in a row heading into its earnings. And everyone is expecting LinkedIn to crush earnings, to really kill it, to have really great earnings. But I'm here to tell you that sometimes that doesn't happen. And we saw with Herbalife, there's a zillion other examples of it. So even though our strikes are definitely well in the money, we're still holding this trade all the way through expiration. And some people emailed me and said, Kirk, I'm just a little bit nervous holding that. Well, if you're nervous holding this position, it means you have too big of a position. And I'm sorry to be the first one to probably tell a lot of you guys that, but if you're nervous about losing money on LinkedIn, then you're probably holding too big of a position. This business is not about making trades that are winners every single trade that we make. While I would love for that to happen, you're going to have losing trades. You're going to have trades that go completely against you, and you're going to have trades that go right. Herbalife went right in our direction. We've had a lot of earnings trades that we've made that go really right, and we've made a lot of money in some of those trades. And this may be one of those ones, LinkedIn, that goes against us and we lose some money. But at the end of the day, if you're worried about this one trade, I'm here to tell you, you haven't traded enough, and you're probably trading this too big that it's becoming too large of a portfolio of your portfolio that's causing you to lose sleep at night. I'm not losing any sleep about LinkedIn. If it works out, great. If it doesn't, we'll adjust the trade. But again, it could definitely be a situation where LinkedIn actually misses earnings expectations and the stock continues to, resume its downtrend that it's been in for the better part of a year. I've seen it happen a number of times, and I'm here to say that I wouldn't be surprised if that happened again. Not that I'm expecting it, but I'm not going to be surprised if that happens again. As a quick side note, MON, which we are trading as far as a calendar spread, but nothing related to earnings, this is what actually can happen. So even though if LinkedIn does jump higher, you look at stock like MON, which had great earnings and gapped higher. Notice the gap higher in the stock after earnings. But before expiration, the stock has reversed that entire move and then some, right? So if the stock had such great earnings and gapped higher, why did the company all of a sudden reverse course, right? And investors now fell out of favor. And not, again, not to say that this could happen with LinkedIn or anything else, but the reality is that even though a stock may gap higher or lower, we have no clue where the stock is going to go after earnings are announced, and really just at any point in the future, right? So we have to make high probability trades, keep your position size small, and this may be a great example and a great, I guess, lesson for a lot of you is looking at a lot of these stocks like this. Okay, so for HLF though, going back to the trades that we closed out today, nothing left in this trade to actually go for, so we closed out for a 5-cent debit. The other trade that we closed out today is MCD, which is McDonald's. So McDonald's, we traded a debit call spread, 92.5, 95 or 97.5 debit call spread, trying to trade this thing a little bit higher. We paid about $250 for it, sold it back to the market today for $300 a piece. So took in a nice $50 profit. Now, in this particular trade for McDonald's, it was really nothing more than the fact that McDonald's has rallied off the base. We thought that the recent downtrend that McDonald's had been in was a little bit too far-fetched. So we actually bought it a couple days after earnings, and now we've held on to it. It's made just a little bit of a rally, but we've started to see a nice little move in the pricing of it. This is originally a 50-50 bet, meaning it could go either way. So now that it's gone our direction, we're going to be diligent in taking off the trade and banking that profit so that we can, use it to kind of help compensate for other trades that might not be as profitable or whatever the case is. So that's the trade with McDonald's. I don't really know if it's got a lot more left in it, but I'm not going to stick around to see. I've made, a nice little trade on it and, kind of got my money and going to get out of this trade. So that's pretty much it. I know there's a lot of stocks that still have earnings. We're looking at a lot of things. Glad we didn't get into Twitter. That was a huge stock that moved way outside of the expected range. Had looked at a lot of things in Twitter and APC, some stocks that have really high implied volatility heading into earnings, but just didn't like the pricing that I was getting in some of those. Not as good as some of the ones that we've traded before, like Microsoft and Facebook, etc. That we really, really liked. So as always, if you guys have any questions, please add them right below here. I'll get back to all of those tonight or tomorrow before the open, and happy trading.